Hello there. Hi, friends. This is Raghu here. So how did the trading go today? We had a great range breakout. We had a gap down. Hope you all did well. Let's go ahead and see how we could have traded today. I'll provide you my insights on Camarilla pivots as well as the standard pivots so that you guys can understand and take the trade next time when you have the same kind of setup. Remember, guys, market is a repetition of history. It keeps happening. So I am pretty new. I'm not an expert, but I know the fact that it is not rocket science. As said in my several videos, uh, learning technical analysis is very easy. Anybody can learn. But mastering the analysis, mastering the right entry and exit, the trading psychology, how to overcome your fear of losing or greed of making more. So, and also money management, how to move your stop loss or how to position your sizing. All these things are much higher than the technical analysis. But of course, once you know the technical analysis, you will be able to identify the trade. That is the beginning. So technical analysis is the foundation for any intraday or day trading. Now, without wasting time, let's quickly see how the opening happened. Now, this is the most common thing across instruments. So I trade in only Nifty, but if you just change the name of Nifty to anything, Apple, Microsoft, or even for the Netflix or Wipro, Infosys, it is same. The charts are same. The pivot levels are same. What you're seeing are is Camarilla pivots. This is 5 minutes. This is 15 minutes. Now, just simply if you observe, L5, this is the last level of Camarilla pivot. Of course, you have L6, L7, people have added. So basically, if you have seen my Camarilla pivot, you know, video. So based on me going through Secret of Pivot Boss by Frank Ochoa and understanding the concepts of market profile, volume profile, money zones, standard pivots, which are nothing but floor pivots, and the Camarilla pivots. So what I have understood is anything beyond S4 is a outside value. So what is the inside value zone? It is R3 S3. If people who wants to understand how these pivots are understood, what do you mean by value area? Value area is within this, it will always be a range bound. And of course, I have told several times, S3 is a buy zone, S4 is a buy zone, R3 is a sell zone, R4 is a sell zone, and beyond R4 is considered as a breakout, and this is the last level of resistance. Below H4 considered as a breakout and the last level of resistance. Below L5, most of the times it's a free fall. Now today, where is the opening happening? The opening happened below previous day low. This is the previous day low. And market went down and market tried testing the previous day low, and anybody, if you had entered here after the market hours, we all know how market works, but I'm just telling you, just by watching the pivots, you know L5 below is a breakout. Okay, let me put how many points. This is 17,321. This is 17,350. So you have around 30 points. 30 points. But if you had entered here with this red candle, say after this green candle, if you had entered here around 20 points, if you had given yourself a 20-point stop loss, then you had almost around 300 points again, guys. So that's a massive fall we had today, and anybody who knows, any lame person can quickly tell that below S4, below L5, it's low 5 or S5, you can call whatever you want, convenient with, it's a breakout. Now yes, market came down and here it formed double top, it came up. So this area was a confusing zone, right? So where do you want to enter? If you follow my price action theory, so on 15 minutes, this is your resistance, right? Market came, took resistance. So unless this is taken out, you have to always look for buying here. And in a strong breakout below S4, below L5, counter trading is very risky until unless the last swing is taken out. So for me on 5 minutes, okay, this is one swing, one swing, one swing. This is second swing. So this is a small swing. I'm considering about where you can see a top clearly and bottom clearly. So when you consider this is the swing where you can see the top. So until unless this swing was taken out upside, I wouldn't advise anybody to counter trade. In fact, I took a counter trade here. This was the S1 pivot, float pivot. This pin bar was reversal, and your market is going to test previous day low, or it can go and test CPR. That was my assumption, S1 or CPR. I took a trade, but after seeing it facing resistance and this long wick, I exited. I think I made around 3,500 Indian rupees. But however, do you see how this is the price action? First 15 minutes here. So in on 5 minutes, market is facing the resistance. What do you see here? I'm making it bigger for you. This is very important. What do I say always? First comes price action, pivots, and then the EMA. I'll walk you through the EMA as well. We have a doji followed by this is a evening star. So sign of weakness. Anybody who had taken a trade here had money. This is wick to body, engulfing candle. So you know market is going to push back. But can you take a counter trade? I wouldn't take a counter trade, especially if you're an option trader, right? Until unless you have a clear direction. You come here, this is an inside bar. See, inside bar is a pause in ongoing trend, and most of the time it favors the current trend. Current trend is downside, market went down. Again, here you have a doji, big candle follow giving a evening star, and this closes below this green star, indicating the strong momentum in downside. Although market went down, I mean sideways here for 20 minutes, your stop loss should have been above this green candle or 50%, because this was a long candle. So in options, it would be very dangerous to keep a complete big candle stop loss. Ideal stop loss a professional would keep here or would keep here. But anyway, how market went. Now, if you have all missed this one, so I have showed you how to beat your fear factor and entry factor. This is the triple EMA, the magic EMAs, which I was talking about, and I have extensively used this for last 2 years, and it's like back of my hand. So as said, this triple EMA should not be the priority. The priority should be price action, pivots, and the triple EMA are using only to time your entry. So if on a strong trend, what did I say? If you have seen my triple EMA videos, any breakout, range breakout, R1 breakout, S1 breakout, L5 breakout, H4 breakout, there entry should be near 5 EMA. And we have pivot as stop loss here, and follow the 5 EMA, and your stop loss should be above 15 EMA. However, when can you enter again? Again, closer to the 15 EMA or 34 EMA in a strong trend. What happens here? You know the price action, you know market is going to go down. If you go down here and follow 5 EMA, you have money here. See here, from here, one pullback, one pullback. Now here is something I want to teach you. This is from Albrook's price action method. I would advise you to read his books, and you can go ahead and attend his training. You can buy his videos online as well. But Albrook's is one of the modern day great in terms of intraday trading, and its price action methodologies are really good. So I know a lot of price action gurus, and I have learned whatever I'm sharing is based on their learning and my personal experience using their learning, and I've customized it. None of the masters use this triple EMA. Triple EMA is a very elementary. They use either 20 EMA. Albrook's use 20 EMA. Some people don't use any EMA. But anyway, to cut the conversation short, to figure out, this is the price action. So what he says is, in a strong trend, when a price is below 20 EMA, this is 15 EMA, right? 20 EMA will come somewhere here. So what he advises is, in a strong downtrend, price usually goes down and it zigzag, and whenever a pullback happens, it's called as one leg pullback. And this leg, this green candle, this is where most of traders are afraid, right? Even I'm afraid. It's pulling back, especially if you're trading in options because of option greed, premium erosion, etc., etc. Now this is one pullback. Now this pullback candle is taken out by the red candle. This will be your entry point. You can follow 5 EMA. What I'm trying to say here is pullbacks are normal. So if these kinds of pullback are more than 4 or more than 3, that means market is reversing. And again, I said, when does a market reversing is confirmed? Reverse is confirmed when the last swing, where you can see the high and low, last swing is taken upside, you can consider market is trying to reverse. Okay, one pullback, or the other way in the contrary, what does the pattern says? The pattern says kind of flag, bearish flag. You need to consider gap down is also a pole. And consider this, whether pullback or bearish flag, whatever you are aware of it to beat your fear. Now watch here. This is one pullback, market goes down. This is every green candle is a pullback. You need to call it as one leg. Now here we have one leg, market tries to go down. This is two leg. Now after two leg, market comes down. This is again a fresh, because this is a red candle going down. This will be first leg taken out. You can go short here, or you can follow 5 EMA. Now see here again, one leg, two leg, and three leg. This is in one, but it did not sustain more than 3 legs. Came down, market goes down. So these terminologies are these kinds of very important tidbits, inputs from the trading masters are very key for your successful trading. And to keep it short, if you just follow pivots, below S4 is a breakout, below H5 is a free fall. Now you have a free fall. Yes, market is pulling back, so you can count the pullbacks, but where is the pullback is going? It's not going beyond 34 EMA to inform you that there is a change of trend. See here, it faces resistance here, comes back near 34 EMA, did not withstand. Now, let's quickly walk you through the pivots. Now this is a floor pivots. Now if you have observed, what did I say for a triple EMA? If the triple EMA is crossing over simultaneously on 5 and 15 minutes, you can anticipate a very strong trend. And I told you this is a game changing. It's going to change your life forever if you follow this along with pivots. Now both have changed, and watch here. It tries to take support below S1. So below S1, even in yesterday's video, I said below S1, you need to anticipate that smart money will enter. But below S1, we had a support. This S2 was a support based on the previous price action. If you see, this was the support, right? This is where, let me take you to 5 minutes. This is the price action I mentioned. See here, where is the pin bar? This is S2 pivot. So here we had S2 and this was a strong support and market bounced there. But anyway, then market went down. And below S2, market would go to S3, then S4, then S5. But will it go in a straight line? No, it always goes in zigzag. And what are the EMAs you need to follow? These are the EMAs, the 5, 15, 34 EMA. If it is going below 200-day moving average, I have told you always anticipate a strong moves, especially below S1, above R1, below previous day low, or double top, double bottom. When the range is broken, you need to anticipate, not in a sideway. You don't see any pivots here. You don't, market is sideways. You don't see double top or any range getting broken. Hope this helped you in understanding the entry points. Doji, market giving a evening star. So this I would like to tell you something here on Doji market going. Now what exactly this means? The Doji is the highest level of indecision. Buyers and sellers are undecided. Now after they're undecided, market makes a decision, that is it wants to go down. This is your signal to go down. Your stop loss is above this. Similarly, inside bar is again a decision. Engulfing is a decision. See, this was also wick to body engulfing, but still market went down because we were below H5. And for you to beat your fear of entry, you can use this triple EMA or the double tops, double bottom or pivot entries where you can enter. See here where this double top is formed, this formed near S3 pivot. And you have an inside bar. So you have a strong downtrend where you can go down. So this is formed near 34 EMA. So your stop loss is just above it. You have to take. Now, if you watch closely, each and every candle, note that market moves and then EMA follows. EMAs are lagging. But in this pullback, you need to just blindly take it. Your stop loss is above 5 EMA. You'll get to know at the end of 5 minutes closure. If you're not able to take a risk of 5 minutes, then forget about trading. You need to choose some other field. That's all I got to say, guys. Thank you so much. Hope this helped. Keep learning. Please subscribe, share, and develop along with me. Thank you so much. Have a good day.